Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com tells us precious metals have had a nice bounce. He also takes a look at the U.S. and Canadian dollars. Anthony Scaramucci, the Mooch, the founder of Skybridge Capital, gives us his perspective on the markets, whether the Uptick rule should be brought back, and international trade. Victor Adair from the Polar Futures Group examines the slowing of the global economy and the crude oil market. Plus, at the end of the show, we'll have company showcase updates from American Manganese President Larry Reaugh and Cypress Resources Strategic Advisor Steve Dyakowski. We'll talk to Ross Clark right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. Welcome back to This Week in Money, Ross.
Always a pleasure to be with you, Jim.
Ross, are precious metals making a move?
Well, they have had a great move. I mean, you take a look at this gold market. We were in the, back in the summer, we were sitting at under $1,200 on gold, around the 1180 bracket, double bottomed or triple bottomed down there, and as of this week, traded up through 1330. So, pretty impressive rally. This takes us back close to the best levels that we saw in the last couple of years here. 2016, 2017 got up to 1360. But we are getting a little long in the tooth on this one. We've had a couple of nice mild corrections, as we called them, just good pauses on the way. And we are now at that point where the seasonal run, which usually is from December through until, can be as late as April, but usually starts to run into trouble once you get past January. And the technical counts that we do these looking at sequential counts. So when you get 9 consecutive days or 9 consecutive weeks with good action, you look for a pause. We've got that now on the weekly charts, and if we go back historically, about 80% of runs like this one will top out within either the week of the 9 or within the next 2. And if we look at so that would say at this point that gold would be ready for a correction at any point. We've got the same pattern happening in silver as well. On a daily basis, the counts that we look at, having broken out through 1300 and rallied to 1330, that completes a count that started back in December, and so the dailies are also at that level of concern. And my own work, where we look for exhaustion and capitulations around major turns, has shown up as an exhaustion style of high, both in the gold and the silver markets in the last 48 hours. So probability here is that we're ready for a pretty decent correction, maybe a pretty good pullback as far as the precious metals are concerned. And, we'll see how well that holds as we move through February into March. Might be looking for a second rally after that. But for now, we're clearly advising people to take some money off the table, pull up tight stops underneath, not only in the bullion, but also in the miners.
The U.S. dollar always closely connected to gold. What's happening with the U.S. buck?
Oh yeah, just right in step with that. The monthly charts on the U.S. dollar showed a reversal in December, and we've got one of our sequential 9s on the monthly chart for January. So this is part of a topping process. The dollar has come off from 97.5 down to 95. This is the U.S. dollar index. And if it breaks through 95, I would say that the trend clearly then is to the downside. On the upper side, you've got 96.5 for resistance. So as long as it continues to walk down, that in turn could provide support for the precious metals once they've got rid of their overbought conditions. But for now, dollar index looks heavy, and we look at a big 16-year cycle on the dollar index. It topped back in January of 2017, and is due to still have significant pressure in the years going forward, but in particular in this year, we're now 2 years and going on in that cycle from the top. So it would be normal for it to have some pretty good pressure here on the downside. Commodities as a whole would benefit from that because so many of them are priced in U.S. dollars. The crude oil, that would support that 10-year cycle we're looking at, which should have bottomed in the last quarter of the eighth year, which was last year. We've got a nice reversal there. In the commodity currencies, the Australian dollar, the Canadian dollar, are holding up pretty well. And as long as the commodity page is looking supportive, then we're probably seeing the Canadian dollar do better here as well.
What about the stock markets in general?
Well, overbought, and 2 weeks ago had a very, very small pause for literally a few days and continued to walk up here. And the strength is more than anybody other than the most ardent bulls had been looking at here. And from my perspective and the work that we're doing, we see the advanced decline line has been exceptionally good off this capitulation low back around Christmas. And that would imply that now the corrections are probably going to be milder than we thought. And you want to be looking at maybe some strength as we move in the next month or so.
Ross, thank you so much for chatting with us.
Nice to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. Coming up, Anthony Scaramucci, next on This Week in Money.
Always consult your investment professional before making any investment decision.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm speaking with Anthony Scaramucci, better known to a lot of you as The Mooch. He's the founder of Skybridge Capital online at skybridgecapital.com. He's also author of Trump, the Blue Collar President. He'll be presenting the upcoming SALT conference in Las Vegas online at salt.org. He's speaking to us from New York. Anthony, welcome to the show.
Hey, great to be on. Thanks for including me.
Anthony, first off, can you tell us a bit about Skybridge Capital and your upcoming SALT conference in Vegas?
So, our firm has three product lines. We have $11 billion under management. I started the firm in 2005, March. And so we have a mutual fund that's a dividend value fund. We have a fund of funds. And then our third project, which we're working on right now, is an opportunity zone real estate fund that takes advantage of the new 2017 tax code, which allows people to defer their capital gains if they move them into areas of the country where, people need growth and people need development. So those are our three products. Our conference is in its 10th season. It's basically a conference related to policy and economics. We sometimes mix in entertainment, and it's a terrific conference. If you go to salt.org, it'll give you a sense for the type of speakers that we've had. But listen, it's been a lot of fun for me to host that event. Come to it. I think they learn a lot about what's going on.
The functioning of the stock markets and the Uptick rule. The Uptick rule was brought in 1934 following the crash of 1929. The Uptick rule only permitted shorting stocks on the offer or uptick. It was illegal to short by hitting the bid. The Uptick rule was removed in the United States in 2007, and the collapse of 2008 followed. A partial rule, but not the full Uptick rule, was brought back in 2010. In Canada, the full Uptick rule was removed in 2012, followed by the TSX Venture Exchange collapsing 80 to 90%. Without the full Uptick rule in place, the U.S. and Canada could see another collapse like 2008. Is President Trump aware of the need to reinstate the full Uptick rule?
So during the campaign, there was conversation about that. And you may remember that one of the planks in the Republican platform during the Republican convention was the reinstallation of Glass-Steagall. And so what you find about the president, he's a bit of a traditionalist in this stuff. He doesn't understand if something had worked so successfully for such a long period of time, why do we need to change or make it different? And so there's people on both sides of this thing. On the Glass-Steagall issue, people would say, well, the banks are modernizing and the heft of the bank is going to make them more stable and they need to compete globally. But as it relates to the Uptick rule, I would love to see the Uptick rule reinstated, because what happens in downdrafting markets, as bids get hit, they drive the prices down ridiculously, and they have a tendency to exaggerate downward drafts in pricing. And so you saw that, frankly, in the month of December. So to me, I would love to see the Uptick rule get reinstated. But I think both you and I know about the regulatory process. It takes a long period of time to implement a rule, and then it takes a long period of time to admit that you're wrong, or perhaps even a longer period of time to admit that you were wrong about that implementation and switching it back to where it was. But I would love to see it switch back, frankly.
Should algorithmic trading take precedence over fairness to individual investors?
Well, unfortunately, algorithmic trading is here to stay. And so if you read Flash Boys, what you mean about fairness to individual investors is that these high-speed data transmissions over the Internet can give an algorithmic trader an advantage over the individual investor. And so that's unfortunate. But I don't see any way that you're going to remove the algorithmic trading from the marketplace. And so, unfortunately, one of the positive and or negative aspects of a free market is that people that have more technical skills, more professional experience, or are able to bring a supercomputer to the playing field will have an advantage. And I think that's unfortunate. But here's what I would say to individual investors. Think long term. Buy stocks and or mutual funds that are low priced, that you're willing to hold for 3, 4, 5 years. Trading the market, if you're an individual, I think you've got too many disadvantages relative to the pros.
Do you think the recent 20% pullback in the U.S. markets is a correction in an ongoing bull market or the beginning of a bear market?
So I think that's a correction in an ongoing bull market. And by the way, you have to remember, I'm in the hedge fund business, so a bear market is not something that I necessarily wouldn't like. I'm sort of indifferent to the bull or the bear market because we can play on either side of that market. So it's not like I'm talking my book like I need a bull market. So I just think that the economic fundamentals, the underpinnings of the economy are still there, and the securities are now fairly to slightly underpriced relative to what we think earnings are going to be in 2019. So therefore, I think that the bull thesis for the market is still intact.
Anthony, do you think President Trump favors a stronger or weaker U.S. dollar?
Really good question. So I think he favors probably a weaker U.S. dollar so that he can help on the exporting side of the U.S. economy. But the bad news for the president and the bad news for the Secretary of Treasury is that with the Fed hikes, and I anticipate there'll be at least 2 more hikes this coming year, that's having the opposite effect. It's actually strengthening the dollar. But if you ask the president point blank, or you ask the Secretary of Treasury point blank, U.S. presidents and U.S. Treasury secretaries are always going to tell you that they're for a strong dollar.
We keep hearing the bond market is in a bubble. What's your opinion?
Well, I definitely don't think it's in a bubble, but there's been a 38-year bull market in bonds, and the reason why the bond market's not in a bubble is that you have still in our society, despite 2.2% core inflation in the United States, in the global society, you still have pockets of deflation, and that's born from excess factory capacity, excess labor around the world, and billions of people onboarding themselves into the Western capitalist system. So the great irony is that you're able to create more goods and services, you're able to create more supply, you're lowering the price of everything, and so therefore the price of money should also go down. So it's not clear to me that we're in a bond market bubble as much as we've had a real secular transformation in the global economy.
The U.S. dollar, of course, continues to be the reserve currency used by the whole world, but I think China would love to have its currency used. Do you think that'll ever happen?
Well, it may happen, but I don't think it's going to happen in our lifetime. So, and I'm 55, expecting to live to 155. So the next 100 years, I think, is going to be very tough to really dislodge the United States as the global reserve currency. There's a number of different factors for that, but the 2 main ones are still the most important commodity in the world. That's crude oil. That's priced in dollars. And as long as the United States has that very strong relationship with the Saudis, it will continue to be priced in dollars. And secondarily, but also probably of equal importance, we have the largest military by a quantum. And so if you look throughout history, reserve currencies have those 2 components. The most important commodities are priced in that currency globally. And then you have the fact that you have the strong military. So if you look at these Basel III capital requirements, every international bank is pricing off their reserves in U.S. dollars, and so therefore you're going to have to hold them. So I just don't see that changing for a very long period of time.
We'll have more with Anthony Scaramucci when This Week in Money returns.
AMY.V Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, AMY.V's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abnresources.com.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Anthony Scaramucci. Is the availability of credit being tightened?
Yeah, on the margin, availability of credit is being tightened. The U.S. government has been unwinding parts of its bond portfolio. We were going through quantitative easing for about 10 years. we've embarked upon quantitative tightening, and that is having an effect, I think, on the margin. I think it's something that people are definitely concerned about in the fourth quarter.
Should President Trump restructure the Fed so it's run by the U.S. government instead of by the big banks?
I think it would be a terrible mistake to restructure the Fed and run it by the U.S. government. I've never seen anything that the government has taken over where the thing is actually done better than in the hands of private enterprise. So I would hope to think that they wouldn't do something like that. If they do, the Fed will become way less independent, and it'll become way more of a political institution, and I think that would present a danger to the free market economy.
Are some parts of the U.S. seeing real estate markets in bubble territory again?
Yeah, I do think that pockets of the United States are in bubble territory. I think one of the negatives of the 2017 tax code was the state and local income tax deduction known as SALT. A lot of that went away, and I think that's caused a lot of unease in the blue states like New York and California, and so you have a supply-demand imbalance in real estate there, and I think prices, unfortunately, are going to have to come lower in those areas, and expectations for sellers are going to have to move down.
Gold and silver is starting to show signs of life. Do you like gold and silver going forward?
I don't dislike them, but it's not something that I typically would buy myself. I would remind every one of your listeners of what Warren Buffett said. You know, if you took all of the gold that's ever been produced and you put it in a cube, okay, it would represent 500 in terms of its valuation. It would represent 500 Exxon Mobils and all of the farmland in the United States. So the choice is, would you rather have those stocks or that sort of business and all the farmland in the United States, or an inedible large cube of gold? And so for me, I would always use the other asset classes relative to gold, even after the crisis when people were driving capital into gold because they feared that the Fed reduction in interest rates was going to lead to a devaluation of money. What they found out, to their great surprise, is that the opposite happened. So I would be cautious in those metals. It's not very difficult. To me, I think they should have a very small place in your portfolio.
Is growing geopolitical uncertainty good for the commodity market?
Well, you would think in a textbook situation that growing geopolitical uncertainty is good for the commodity market, but what you're learning is that because of the technology in the marketplace today, it is way easier to produce oil, and it's way easier as a result of things like fracking to extract fossil fuels from the ground than it was even 50 or 100 years ago. So geopolitical uncertainty used to be a mechanism to cause price shock or spiking, but it's way less so today just because we've gotten so much better at growing food, so much better at irrigating farmland, so much better at finding and extracting oil and shale, that it has less of a consequence today.
Is President Trump likely to be able to prevent the price of oil from spiking higher?
Well, I think he's done a good job of jawboning, obviously with the Saudis, keeping prices low or at least contained, but I don't think that lasts forever. So, if you get a real pickup in aggregate demand in the global economy, oil prices are going to go up.
Are you investing in the electric vehicle revolution?
Us personally, we are not. That's primarily because we're in the fixed income space and we're shooting for a high single-digit return with low volatility. So the electric car space, well, that's very exciting, and I think there's a very large future in it. It just has too much volatility for our personalities.
Globalism versus nationalism. What are your thoughts?
Well, I think what the president's trying to message to people is that he wants to be both. He wants to be America first, put the interests of America first, but then also be fully integrated into the global economy. So I sort of live somewhere near there. I think it's very important that the United States does not disengage from the society, but stays very, very focused on making sure that we're part of the global system. But I think we also have to be mindful that there's policies we need to put in place to protect American working-class families. So I'm in a little bit of both.
We'll have more with Anthony Scaramucci when This Week in Money returns.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juno Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. Our guest is Anthony Scaramucci. He's speaking to us from New York. Anthony, do you think China is still on track to become the world's next superpower?
Well, I think China is on track. I think it's already a superpower in many respects, certainly an economic superpower, and I think it's on track to share the world stage with the U.S. I don't see the U.S., despite all the doomsday predictions and all that other stuff, relinquishing its seat at the top of the food chain anytime soon. It's just, if you look at our system and you look at the microeconomic competitive advantages in our system due to the free market, it's not going anywhere. But I do see China's rise as something that the United States has to help to manage. We certainly want a peaceful China, and we want a peaceful bilateral relationship. But I don't see them eclipsing the United States anytime soon.
Are China and the U.S. likely to make a trade deal anytime soon?
Yeah, well, I see that on the horizon. I don't know if they make the March 1st deadline, but I do think the parameters for a good deal between the two is very, very likely before the end of June.
Are cryptocurrencies the tulip mania of our day?
Listen, I'm not the expert on cryptocurrencies. I understand the appeal from an academic perspective, and I understand the appeal as it relates to it cannot be manipulated by a government or a central bank. But what I don't understand is that without the full faith backing of a government, how that currency is going to get the global traction that it needs. So I don't want to be overly skeptical because I'm not the expert, but I'm certainly not, I'm not going to rule out that there will be a few existing cryptocurrencies, but I'm also not surprised that they're in the doldrums like they are right now.
Anthony, what can you tell us about your new book, Trump, the Blue Collar President?
Well, the book came out late October, was a bestseller in the fourth quarter of last year. And it was a lot of fun to write. And what I did was I interspersed a personal memoir in there with a lot of thoughts about the president's campaign, what I saw in that campaign, and why the president was so attractive to so many blue-collar workers. So it was really a lot of fun for me to be a part of that campaign. And although I had a short-lived White House tenure, and I left quite infamously by being fired after 11 days, I wrote pretty accurately about what I saw, and I was very happy to be a part of it.
Do you think you'll ever be part of the White House staff again?
No. I don't see myself ever being part of the White House staff again.
Has President Trump taken the best policies of the Republicans and of the Democrats at the same time, causing the Democrats to move to the far left?
Yes, I do think that that's been a mistake by the Democrats. I think the Democrats lurching to the far left is actually having a poor effect on them, and I think it'll likely cause a independent run by somebody, whether it's Howard Schultz or somebody else, and a far left candidate, because the country is predominantly center-right. I don't see the country lurching that far to the left for anybody, even though that party's decided to go in that direction.
A question maybe the White House press corps won't ask. Who is QAnon?
Yeah, I don't know. I got caught in that last year. Someone tried to suggest I was part of that conspiracy. I honestly have no idea who QAnon is. Not sure if it's real or fake or, any of the stuff is true. I just haven't done enough research on it. So I'm the wrong guy to ask about it.
people wanted to get your book, The Blue Collar President, where can they get it?
Where can they get it? Oh, yeah. I'm sorry. Yeah, it's available on Amazon, Barnes & Noble, local bookstores. It's selling briskly. It's probably not selling as well as some of these negative tell-all books on the president, but it's selling pretty briskly. And it's a pretty good economic study of what happened over the last 30 years to blue-collar families.
Do you think it's too early to say how President Trump is going to go down in history?
Well, listen, I mean, he's certainly a disruptor, so there's no question that he's going to go down as a disruptive force. But I do predict that 50 years from now, he represented a break in the establishment system that's really failed the United States electorate. I think at the end of the day, the average person would look at the establishment and say, boy, they've been a disaster for me and my family. They racked up a lot of debt. There's a lot of graft and corruption. And the reason why he got elected is people are sort of fed up with that. And so I hope 10, 20, 30 years ago, people look back and say, well, at least he represented a change in the system. And hopefully that change is it's going to lead to something positive for the American people.
Anthony, before we go, how can people find out more about Skybridge Capital?
Well, you can go to our website. It's now www.skybridge.com. You can look us up on the internet, and you can find my videos on my Skybridge presentations. It was a little bit different from my political or Big Brother videos, and you can learn a lot about us and what we do from those presentations online.
Anthony, just between you and me, did you win Big Brother?
Yeah, no, I was just on there as a spoof. I only spent 6 days in the house. So, I was just there for a spoof, but it was a lot of fun.
Anthony, thank you so much for being on This Week in Money.
Hey, great to be with you, and appreciate you inviting me.
My guest has been Anthony Scaramucci, the founder of Skybridge Capital, online at skybridgecapital.com. He was speaking to us from New York. Coming up, co-founder of the Polar Futures Group, Victor Adair, next on This Week in Money.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Victor Adair, co-founder of the Polar Futures Group. He's Senior Vice President and Derivatives Portfolio Manager at PI Financial in Vancouver. His website, polarfuturesgroup.com. Welcome back to the show, Victor.
Well, thank you, Jim. Happy New Year to you and to all your listeners.
Now, of course, we've heard so much talk about we're just jammed with event risk. We've got Brexit, corporate reports, the Fed meeting, U.S.-China trade talks have just resumed, economic data reports. But let's start off with the U.S. Fed. They did not hike rates. And did you like what you heard from Chairman Jerome Powell?
Well, I got to say I like Powell. For the last year or so, I've been making the case, from my point of view, that it's a new Fed under Powell, and that the thing that's happened here is that the business cycle is changing. So let me go back to the new Fed. My definition of that was he's not Greenspan, he's not Bernanke, he's not Yellen. He's going to be tougher than they are, and I think that's definitely kind of the way the market saw it last year, that it looked like the United States was going to be moving rates much more aggressively than the other major countries, and I think that was one of the key underpinnings to the U.S. dollar strength that we saw, certainly, say, between April and December or so of last year. Now, the business cycle is changing. I mean, I subscribe to the view that global economic growth is slowing from what it was. And Powell is having to, as head of the Fed, is having to factor that in, the decisions that they're making. So this week we saw them stand pat on interest rates. I mean, that was absolutely expected. The thing that gave the meeting a little bit of a dovish tilt, at least, you know, in the first blush of looking at it, is they have confirmed what they've been talking about for a while now, that they may start to change their policy of what they do with their balance sheet. So the Fed's been doing two things. They've been raising interest rates gradually over the past couple of years, and they've been, going back a year and a half or so, allowing the inventory of treasuries and mortgages that they'd built up. They were buying those things out of the market in the past few years to stimulate the economy. They're allowing that inventory to shrink as those various instruments mature. So the worry has been that doing those two things, raising rates and shrinking their balance sheet, was really starting to tighten financial conditions. And the worry has been, is the Fed going to tighten right into the next recession? So, you know, the immediate reaction following the meeting, the U.S. dollar was weaker. The stock market just loved it. You know, price of the stock market rallying. You know, we'll see here. I think the bigger picture is this slowing global economy, and that may come home to roost with, you know, the stock market, with the bond market, and the currency markets.
What's causing the slowdown? Is it just natural cycle? You can't keep expanding forever?
Well, you know, there is that. There is the business cycle, and we could spend the rest of the week talking about, you know, what's causing it, but I think really, yes, we've had a 9-year run, certainly in the United States, from March of 2009, with the stock market's up, 300% or something like that, the major indices. We've had a great run. And then maybe the cherry on top was the tax changes that were brought in by Trump and his administration last year. When I look at the stock market, we've had that tremendous run from 2009 to the highs of last year. You know, I'll give you the view right now. My thought is, we made a very important high in October last year. We sold off very hard, 20% or so, into the lows in December, probably, you know, too far, too quickly on the sell-off. We've had a bounce back here, and I think my thought is, at some point here, this bounce back from those December lows rolls over, and then we'll see what everything's made of.
The latest round of negotiations between the U.S. and China got underway in Washington this week. They've got 4 weeks until the March deadline set by Trump, when tariffs on $200 billion worth of Chinese exports will rise from 10 to 25% if no deal is in place. What do you think is going to happen?
Oh, I think they're going to come up with some sort of a deal. You know, but for perspective, you remember Trump declaring that NAFTA was just the worst deal that had ever been done by anybody, anywhere, anytime, sort of thing. And after all the haranguing and all of that, they came up with the USMCA. And in reality, Trump said, oh, it's such a great deal, such a great deal. It really wasn't much of a change from how things had been before. I think there's so many real impediments, differences between America and China, that neither side is going to budge on the really important things, but both sides want some sort of a deal. I think the markets would see it as a disaster if we go into March and the tariffs on $200 billion worth of Chinese imports are boosted to 25% from 10. So they'll get something done, but, you know, China and America are going down the road to banging heads, or maybe, who knows how serious it'll get. So, yeah, I think for optics, let's say, they'll come up with some sort of a deal. I wonder whether or not China, which has boosted their economy since the great financial crisis with trillions of dollars in debt, if this booming economy isn't actually built on a house of cards, if the people who've been bearish on China, you know, the Jim Chanos of the world, the Kyle Bass's of the world, maybe will finally be right. I remember being in my trading rooms in the late 1980s when Japan was in this incredible ascendancy, and it looked like any day now, Japan was going to take over the world. And then at the very end in 1889, the market topped out, the Nikkei topped out, started to fall, fell in half over the next 9 months, and, the real estate market, which had been just incredibly overpriced, took a big fall. In some way, and by the way, Japan has sort of remained in a rolling recession for the past couple of decades. Sometimes I wonder if we don't get something the same that happens here with China, where we're so convinced that, or some folks out there are so sure that China's going to take over the world. Maybe not. Anyway, to come back to your question, yeah, I think they'll strike some sort of a deal, but I think it'll be mostly optics.
We'll have more with Victor Adair right after this.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the pink CYD-VF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Victor Adair. Victor, stock markets around the world sold off last fall and have bounced back since Christmas. Do you think markets are going to keep going higher?
Well, I guess I tipped my hand on that a few minutes ago. I think this rally that we've had back from the Christmas lows will, in fact, roll over, and we'll get some test of those Christmas lows. Now, I think the S&P 500, the lead American benchmark stock indices, is the bellwether for the whole global market sentiment that I look at. In other words, if you wanted to know if the market's feeling risk on or risk off today, you don't need to look much further than the S&P 500. And I guess maybe to come back to your question again, what I think here is that we'll get this bounce back that we've had. If it rolls over and we test the previous lows. Now, what that could mean is we roll over, go down, and don't get anywhere near the December lows and start to rally again. I think in that case, it's a green light buy. If we go down, and particularly given how much we bounced off those lows, if we go back down and take out the lows made in December, then I think it's a case of look out below. And I think then, again, the big thing that's happening here is this slowing global economy. A number of the major companies that were reporting this week came out with some rather disturbing indications of businesses slowing. And given all of the leverage that's been built up in our financial systems around the world here, if things do start to slow, things could get a little rough pretty quickly.
You were very bullish on the U.S. dollar when we talked late last year. Are you still a big U.S. dollar supporter?
Yeah, over the years, I've been a U.S. dollar bull and a U.S. dollar bear. I try to, I'm not like going one way all the time. And I've traded currencies for certainly more than 40 years. And let me say this about currency trading. It's relative, It is a case of oftentimes the least ugly in the beauty contest wins. There are people out there that think the U.S. dollar is in horrible trouble, and that you should not hold any U.S. dollars, and, maybe usually a lot of those folks think you should just hold gold. But if you're looking at the U.S. dollar relative to the Japanese yen or the euro or the Canadian dollar or the Australian dollar, everybody's got problems. So it's not so much a case of you can find something that is without a blemish. That just doesn't exist. So I think that capital will flow to America, or does flow to America, which is the financial center of the world. It goes there for safety and for opportunity. Capital will flow away from America when it's feeling frisky, when it is willing to take risks, in pursuit of bigger rewards. So it's a bit of a barometer of risk on and risk off as well. There's a lot of other things that come into there. If there's political views that are going one way or another and push the currencies, that'll happen. Certainly different levels of interest rates at different times, but big picture, that's what it is. And if my view here is if the global economy is slowing, I think that will, over time, attract capital to America. Countries and companies outside of the United States that have borrowed a lot of U.S. dollars are going to struggle to service that debt, and that will put upward pressure on the U.S. dollar as well. So, and maybe we'll get to this later about trading. This is a view I've got, and as a trader, boy, oh boy, am I ever willing to be wrong. I have a baseline view. The market is going that way, then I'm more inclined to stay with the trade. But if I put on a trade, for instance, if I'm buying the U.S. dollar at any point in time, the first thing I want to ask myself is, well, if I'm wrong about that, where would I get out? So when we talk about these, when I answer these questions, that doesn't necessarily mean that I've, got my net worth bet on that idea. That's for sure.
The Canadian dollar dropped from a high of around 82 cents in February of last year to 73.5 cents around Christmas. You were very bullish, or I should say bearish, on the loonie last year. Have you changed your mind about the Canuck buck?
Yeah, I was negative on Canada most of last year, and I did trade it mostly from the short side. I know I was long Canada on a few occasions. I think that the main drivers for Canada, particularly lately, have been the commodities market. In other words, I've said this at conferences over the years, if you put two charts up on the wall, one's of the Canadian dollar and one is of a commodity index, and you step back 20 feet and you look at them and they look virtually identical. Crude oil, in particular, as a subset of commodities, has had a real effect on the value of the Canadian dollar. And then what we call the big dollar, the U.S. dollar. If the U.S. dollar is strong against most other currencies, it's most likely strong against the Canadian dollar as well. Interest rates from time to time are important. Lately, they haven't been that important, it seems, even though, like say at the 2-year government paper space, it definitely favors the United States with about a 70 basis point advantage to the U.S. And here's something else with Canada. It kind of, if you'll notice that the high last year, as you were mentioning, 82 cents, came just as the stock markets of the world, and particularly the American stock market, were topping out. So, and then in the next 6 weeks, as the stock market in the States took a good tumble, the Canadian dollar came down about 6 cents in a 6-week period. Another high we had in early October. That was just as the U.S. stock market was then turning over from an all-time high, and crude oil was turning over from about a 4-year high. The Canadian dollar dropped from about 78 cents to 73.5 cents through that October to Christmas period. So I'm saying another market that moves similarly to, or Canada is correlated to, would be the U.S. stock market, the price of crude oil. Slower, if I'm looking ahead, slower global growth probably means weaker commodity prices, weaker commodity demand. If capital is flowing to the U.S. in an environment like that, generally I'd be looking for the Canadian dollar to be weaker.
We'll have more with Victor Adair when This Week in Money returns.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back to This Week in Money. We're speaking with Victor Adair. Victor, West Texas crude hit a 4-year high last October, hitting around $76. Then it dropped like a rock to about $43 around Christmas. It's now around the $55 mark. What are your thoughts on crude?
Well, as I was mentioning with the Canadian dollar, crude and the stock market had a very similar chart pattern from, say, October of last year to now. In other words, they both fell from the beginning of October to Christmas time, and they both had a good bounce back from that level. So there's been call it a sentimental correlation between WTI and stocks. Like stocks, I'm inclined to think that the bounce that we've had in stocks, in WTI, since Christmas, will roll over and test the lows. Now, by testing the lows, that doesn't mean that we necessarily have to trade down below $42, but I think we can roll over. And if we do go below that $42 level, then I think it could be, again, like stocks, sort of a case of watch out below. And if we don't and start to gather, pick it up from there, then I think we could go higher with crude. At the moment, I have no position on, so I'd be looking to see what would happen if, in fact, we fall back from the highs. Venezuela is in the news lately, and it seemed inevitable, I guess, that this was going to happen, that the amount of crude coming out of Venezuela was going to be restricted either by the American sanctions which have been put on, or that the country was just going to dissolve in a chaos and be unable to deliver. The kind of crude that comes out of Venezuela is a high sulfur, heavy crude, and a lot of the American refineries on the Gulf Coast are set up to process that. They can't just switch, the setup overnight and start processing lighter crude. So I'm wondering if the problems in Venezuela, the inability to get that crude, will be an opportunity for Canada, where we've got our heavy, high sulfur crude will be more in demand by the Texas refineries down there. Another important thing here on crude, we're going to see the United States probably go through 12 million barrels a day of production this year. It seems right now that they are, if they're not the top producer in the world, they're certainly very close there, with Russia and Saudi being the other two people. There's a lot of crude there's a lot of crude available, whether or not it gets produced. And if we're going to have a slowing economy, then maybe demand is down in the short term here for crude. My friend Joseph Schachter, I reference him a lot when I talk about crude oil. He's looking in the next couple of years at a good, strong bull market in crude, and I can't find any fault with his argument. And one of the underpinnings of that is that India will become a real demand source for crude oil. So let's say if Joseph's view is we'll see some lows in crude oil this quarter, that as we go out in the next couple of years, you'd see prices much higher. And I'm certainly sympathetic to that kind of view.
Gold hit an 8-month high this week, up about $140 from the low it made last summer. I remember you telling us you were trading it from the long side late last year. Are you still doing that?
Unfortunately, I'm not, but I'm definitely not short. I have traded gold from the long side the past few months. Probably should have just been patient, bought it and locked it away, but I didn't. I traded. I have to say, trading's definitely not a game of perfect. But, gold is the price of gold that we most often see. It's very much a mirror image of the U.S. dollar. We had the U.S. dollar, for instance, hit a 14-month high in August of last year, and that was the day that gold made its low for the last year. Gold also often moves opposite to real interest rates. So if real interest rates are treading lower, especially if they're below zero, that's a good environment for gold. You're more likely to see gold rise. Remember, gold had a high back in mid-2016, around the time of Brexit, when we had about $12 trillion worth of sovereign debt around the world, was negative yield at that time. Gold also, gets a safe haven bid. I think the stock market tumbling in December the way it did, it gave gold market a bid. I think gold was up about $60 or so as the stock market was falling in that early part of December. And I think lately, I think the gold market has kind of sniffed out that the Fed is changing. that the way we saw the Fed say 9 months ago, that they were going to be, like an army marching ahead, every quarter or even more often, they're going to be kicking interest rates up by another quarter, tightening financial conditions. That's obviously been changing, at least the market's view of that's been changing. I think gold has sniffed that out. And one last thing, and we haven't even talked about this anywhere else today, but positioning risk is really an important factor in all of the markets I look at. And we go back here a few months ago when for the first time in over 10 years we saw that speculators in the futures markets were net short gold. So at the time it was like, the stock market's going up, things are great and all that sort of thing. Who needs gold? So it was being ignored. And so we've come from a position where it certainly, was not overbought. So as gold started to rise, anybody that was short had to start to cover and that sort of thing. So I think gold is, it's exhibited here certainly in the last several months that it's on an uptrend, and I would not want to be fading that trend.
Victor, you've been trading futures for over 40 years. How do you make your specific trades? Do you base them on what the markets are doing or what you think the markets will do?
Well, certainly, there's some of both of that. I mean, I would say with trading that you have to find a way to participate in the market that suits you. And what I do might not work for anybody else. But I certainly know any of the successful traders that I've known over years, and by successful I mean people that have done well over years, not just a flash in the pan, that just have developed their own style, something that works for them. I think it's very much a process, and you work out a process and sort of through thick and thin. With athletes, for instance, they often have to play hurt. You're not always at your best, and if you don't have a process to fall back on, then you could really easily fall into some sort of a black hole of depression when you've had half a dozen trades in a row all go against you. That's sort of the psychology of it, and your objectives. I mean, I'm just trying to make money with my trading, and for instance, I would pity that the strategists that are out there, the guys that'll, make a big call on a market, and as the market goes against them, they dig in their heels and ultimately just go down with the ship. I'll have an opinion about something, I'll put a trade on, if it's not working out, bang, I'm gone. I just don't want to stand around and try to convince anybody that I'm right when the evidence is obviously to the contrary. Day to day, I read a lot of research, opinion pieces. I mean, you can get really confused by reading so many different views, but I'm just looking to have an idea stimulated. If I'm reading something and I might go, hey, wait a second, and I'll go and check something else on my screens, go, yeah, well then if that's the case, then blah, 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 and sort of make that's part of my process. I'm going to look at hundreds and hundreds of charts, and I don't just look at the charts of a market, say, expressed in U.S. dollar terms. I may look at different spreads and look at things in different currencies, and I'm always saying, why is that? How come that's happening? And you just have that sort of a questioning attitude, I think is key. You got to be willing to be wrong, and that's hard for me to be truthful. I really, I kind of take it personally in a way when I lose money, and I mean, I've trained myself to try not to do that, but it's necessary. All of the money you're going to make from trading probably is going to come from 10 or 15% of the trades that you put on. The rest of them just kind of offset each other. So if you can't sort of weather the storm as it's going along, it's really tough to stay with that. As I said, the last time we talked, one of the most important things for me is to write down, keep a pad on my trading desk here, why I'm getting into a trade, where I'm going to get out of it if it doesn't work out, why I might move the stop if the market starts to go my way and I move the stop along with it. And then I'll jot down a couple of notes of a post-mortem about what happened during the time that the trade was on. It's not a game of perfect. It's a marathon, not a sprint. And if anything, one of the wonderful old chestnuts is to just try to stay with your winning trades get out of the losers quick, but, try to stay, or if you can, even add to your winners.
Victor, thank you so much for being on This Week in Money.
Jim, it's always a pleasure. Thank you. Look forward to talking with you again.
My guest has been Victor Adair, co-founder of the Polar Futures Group. He's Senior Vice President and Derivatives Portfolio Manager at PI Financial in Vancouver. His website, polarfuturesgroup.com. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Anthony Scaramucci, Victor Adair, and thank you for listening. If you have any questions for the show or our guests, you can send them to info@howstreet.com. Now stand by for company showcase updates from American Manganese CEO and President Larry Reaugh and Cypress Resources Strategic Advisor Steve Dyakowski. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with American Manganese CEO and President Larry Reaugh. Larry, welcome back to the show.
Jim, always good talking to you.
Larry, anything new that your shareholders should know about American Manganese?
Well, just to give you a snappy update, we're moving ahead with what we're getting the pilot plant ready. And, of course, we're just sitting on our hands waiting for approval or the final number for our patent. But aside from that, I've been talking about in the last few podcasts that I've been mentioning the fact that there's more news, positive news about recycling lithium-ion batteries than there has been all the way through. It was all we ever had was bad news, people saying it couldn't be done, it wasn't worth it, it was, it was just all negativity. And but now you're starting to see more positive things. Now, I just read a report from a presentation that was done by Berenberg Thematics by their analyst Asad Fared at the Advanced Automobile Battery Conference in Strasbourg, France. And the title of that is EV Battery Lifecycles to be only 5 years. This is more to what we've thought all along, and if you go back into the history of what we've said, we always talked 5 to 8 years or 5 to 7 years on a battery, but they're saying it's going to be only 5 years. And what does that mean for us? Well, that means more batteries coming free in the next few years than we previously thought. What they say is life cycles are closer to 5 years than the more widely believed 15 to 18 years. Now, that was way out there. The Assad, the analyst at Berenberg Thematics, said second life usage of EV battery packs and stationary storage, commonly expected to add 10 years to battery cell usage, is an unrealizable dream. Fared said, delegates at the Advanced Automobile Battery Conference in Strasbourg are entitled to know that refurbishing and testing, sorting old cells for secondary usage in the power sector is highly labor intensive. This is in addition to the high degradation rates of battery cells after EVs makes a second life. EV use makes a second life. Applications unfeasible, he added. We've been saying that all along. It just didn't make sense to do that. Not only are you basically tying up valuable cathode metals on a storage unit, but there was a high cost of doing that. He's also said that the capacity fade of EV battery packs will increase over the next 5 years, and due to three major factors. One is the increasing charging speeds.
and that makes a big difference. Doubling the charge and decreases the degradation rate by 400%. The market shift toward high nickel content batteries such as NMC 811, for those that aren't aware of what 811 stands for, that stands for 8 parts nickel, 1 part manganese, and 1 part cobalt. So that also reduces the lifespan. Higher nickel content batteries have shorter, lifespans than LFPs. So what he's saying is that, second use is virtually, it's not a feasible situation to go into. Now, he also estimates that 262,000 metric tons of EV batteries will be recycled by 2022. That's not very far away when you think about it, and which would generate 76,000 metric tons of lithium, 1,100 metric tons of cobalt, and 20,000 metric tons of nickel. Now, the lithium alone is worth $912 million, and the cobalt is $374 million, and the nickel is $249 million, for a total of $1.5 billion. And that's what recyclers are looking for. So the increased supply of recycled material could negate the potential bottlenecks in the supply of essential battery metals. And he said this could happen in the next 10 years. He estimated that 30% of incremental demand for lithium and nickel in the next 10 years will be met by recycled materials. So the increased cobalt sulfite North Asia unchanged, he's got 12,800 metric tons. We see it at, we follow it closely. It's about 36,000. So I think that's a misprint. But I've attached this report to this podcast, and I would encourage everybody to read it. What I'm saying overall is this is a great bit of news. People will start, looking at recycling as more than just a phase that everybody's going through, something like Second Life. Recycling is here to stay, and I'm happy to say that we're the only company with a published patent out there to do this, and so that kind of puts us in the front line, and I think it's going to bring some big attention this year. I don't know exactly when, but I think that we will have some suitors. I don't know what direction we're going in. People want to ask that. I would like to see a joint venture with a company that could afford to put a lot of these plants into production in a huge hurry. And but it may be just a matter of licensing, some battery manufacturers with the process so they can process their own end-of-life batteries and their own scraps. So I'm not sure how that's going to go. Another way that you might want to look at that is if you're a miner, of course, I'd think of this, and if this is a multi-billion-dollar business, a net smelter return on, which wouldn't be called a net smelter return, but the same thing, could be sold by the company to give them that leg up to get a few plants into production. So I think we got a good future, Jim.
Larry, where are you traded, and how can people get more information about American Manganese?
We're traded on the Toronto Venture Exchange under the symbol AMY. We're traded in the U.S. under the symbol AMYZF. We're traded in Frankfurt on the Frankfurt Exchange under the symbol 2AM. And they can reach us at, first off, go to our website at AmericanManganeseInc.com or phone the company at 778-574-4444. Or you can email me at lreaugh, L-R-E-A-U-G-H at amymn.com.
Larry, thank you so much for the update.
You're welcome.
I've been speaking with Larry Reaugh, American Manganese CEO and President. I'm Jim Goddard. Our conversation took place on February 1st.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Simon Dyakowski. He's the strategic advisor for Cypress Development. Welcome to the show, Simon.
Thanks for having me, Jim.
Simon, Cypress just sent out a news release. What was in it?
Yeah, so Cypress announced this morning that it's acquired 100% of the Glory claims, which consists of approximately half of the Clayton Valley Lithium deposit. So it's more of a housekeeping item, but it's significant in that half of the project is now 100% owned by Cypress. The payment of $75,000 was made and 250,000 shares to the vendor. And with respect to the Dean claims, we're almost complete with that purchase, which will be at the end of the year. There's $50,000 left to be paid in 300,000 shares. So really more of a housekeeping item, but, important for us to get that buttoned up. And we are continuing, along the path of developing the Clayton Valley project. Some upcoming news that investors can look forward to. We're continuing to work on metallurgy. So Cypress is building on last year's metallurgical program, the results of which were published in the PEA in October of 2018. Last year's program consisted of single-stage bench tests using smaller samples of about 100 grams to 250 grams. Those samples were leached for 8 hours. So now as we're moving along to the pre-feas, we're actually ramping up those samples to provide a higher level of clarity to investors. The current program's using samples that are up to 3 kilograms, so significantly more materials being tested than was at the PEA stage. More specifically, the samples are being split into 200-gram charges, and each of them are being run through several leach steps until the final solid residues reach a constant level of pH and extraction. So it's really a steady state. And another key difference between the samples that we're running now and that were being used in the PEA are that they're being optimized under varied conditions. So the company's making good progress on the metallurgical work. And we expect to see some results of that work come out over the next few weeks. As well, this was mentioned in the news release this morning, the company is moving towards starting its infill drill program. So drilling hasn't started yet. It's expected to start over the next 2 to 4 weeks. And just to give you a quick update on the drilling. So the drilling is really for the pre-feasibility study. The plan consists of about 5 holes. It's intended to focus on the higher grade lithium clays that are within the PEA resource model. And the intention is to better define the mineralization in the mine area that we're contemplating in the pre-feasibility study. So the holes are expected to be approximately 300 feet deep, with final depth being determined on mineralogy and drilling conditions. They may extend deeper if it's warranted. We're looking at doing approximately 1,500 to 2,500 feet of NQ core drilling, and that will all be prepped, logged, and assayed, and the material will be used in further metallurgical testing. And it's important to note that the metallurgical testing that we've been doing to date has been used with existing drill core, and there's been more than enough material to test for the stage that Cypress is at right now. So really those are 2 pretty significant catalysts that are coming up over the next, call it, month to 6 weeks. First with drilling, and then with metallurgical test work, and then ultimately the pre-feasibility study should be out later in the second quarter. So that's the, in a nutshell, that's an update of what we're working on and what was announced this morning.
Simon, for people new to Cypress, what is the company all about?
Yeah, so Cypress is a lithium junior to development stage company that's developing the Clayton Valley Lithium project down in Nevada. So it's located approximately halfway between Reno and Las Vegas. The project is interesting. It's a very large clay-bearing lithium deposit. It's at the preliminary economic assessment level now. So a PEA was published last year indicating a very robust economics potentially with an NPV of almost $1.5 billion US. The company at this point is moving that study along to a pre-feasibility study level, hoping to get better granularity and information with respect to the economic assumptions in the PEA, and that's expected to come in the second quarter. So it's a very exciting project. It's located strategically in Nevada. The mineral that we're targeting and that we've discovered is lithium. It's a strategic mineral in the United States. With the EV revolution in full swing, electric vehicles in the U.S., there's a strong demand for lithium, and particularly in the United States, the current administration there has designated lithium as a strategic metal, and they're very interested in having domestic sources of lithium developed. So we're right in a very good neighborhood to have made this discovery, and we're advancing the project rapidly. I should note that the company is relatively new. This discovery was made about 2 years ago, and we've taken the discovery from drilling initial analysis to some initial met work to then a PEA and now pre-feasibility stage within the last 24 months. So it's advanced rapidly. We're in a great location, and there's potentially huge value to be realized from this project.
Simon, where is Cypress traded and under what symbols?
Cypress is traded on the TSX Venture Exchange under the symbol CYP, and it's also traded on the OTCQB in the United States under the symbol CYD-VF.
And how can people get more information about Cypress?
The best way to do that would be to go onto the company's website. It is www.cypressdevelopment.com and go from there.
Simon, thanks a lot for the update.
Thank you, Jim.
I've been speaking with Simon Dyakowski. He's the strategic advisor for Cypress Development Corp. I'm Jim Goddard. Our conversation took place on January 28th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.